because even if while we have reduced the income liability and the tax liability in the case of income up to 12 lakhs, it's zero. But at the same time, for income of 24 lakhs and above, the benefit and the relief that has been given is above 1,10,000. So all across, the taxpayers have gained.
I'll come to you, Mr. Agarwal, Sanjay Agarwal. So, well, tariffs have changed for good on many products. BCD has also changed. But you think more could have happened? Because one big factor is definitely Trump's tariff war. And you are the one who is going to be maybe on the right side or the wrong side. So you think more could have happened had there been some clarity? And how do you plan to deal this particular issue of tariff war that can come and then the world, including India, is afraid?
The rate rationalization exercise which has been done in this budget is the outcome of what announcement was made by the finance minister in last year July budget. And in this exercise, the objectives were very clear to us that we had to provide competitiveness to the Indian industry, and then we have to provide, we have to simplify the tax structure, and then we have to ensure that ease of doing business is not lost. And with these objectives, this exercise has been conducted. And in this exercise, because many times it has been mentioned that in India there are very high tariff rates. So in this exercise, we have eliminated that rates of 25%, 30%, 35%, 40%, 100%, 125% and 150% on industrial goods. We have left out the agriculture goods and textiles. And the rates which have been retained are 0%, 2.5%, 5%, 7.5%, 10%, 15%, 20% and 70%. There is a rationale behind for retaining these rates, because what we wanted to do is that we wanted to have a graded duty structure, and in that graded duty structure we have kept the raw materials or ores or minerals at 0 or 2.5% rate. We have kept after the goods which are produced after certain processing of these inputs or the intermediates at 5% or 7.5%. We have kept the capital goods at the rate of 7.5% and we have kept the final goods on 10%. And this rate structure has remained stable over almost 17 years. Over and above that, there are rate of 15% and 20%. In these rates, we have kept the items which are generally covered under PLI or PMP scheme of Government of India to promote Make in India. So such items are there. In addition to that, there are certain items where we notice that there is surge in imports and those particular industries require higher protection. So items have been kept like that in those rates.
Sir, one quick question I'll ask on the GST rates on health insurance premium. In Jaisalmer it couldn't be decided. I know it's a matter of GST Council. So where do you see the process going, and a lot of expectations now that the income tax relief has come? Will there be relief coming on GST on health insurance premium, and what's over there?
Before I answer your question on GST rates, let me complete our customs part. Apart from that exercise, there were certain tariff lines, 82 in total, where there was cess as well as surcharge. So it was decided that on these 82 tariff lines, surcharge is exempted. In addition to that, there were certain items, tariff lines, on which the rate was reduced to 0 or 2.5% in last budget. In this budget also rate has been reduced to 0. So what we have done is we have tariffized these rates in the tariff itself, so that trade will not have to look into the notifications to determine what is the effective rate. Now coming to the GST rate rationalization exercise, that is because for that purpose a GOM has been constituted by the GST Council. The GOM is going into all the aspects or the tax rates and their disputes because of multiple rates applicable to items of similar nature, and then the revenue consideration. They are going into all the aspects, and they will be presenting their report before the GST Council, and on that basis then it will be discussed by union as well as by the states, and what is recommended by them will be notified. So that exercise is somewhat different than the exercise which is conducted in case of customs duty rate rationalization exercise, where union has to do it.
Sir, one last quick question to you, Mr. Agarwal. Well, no change in capital gains tax. STT is also no change. So it's a relief to markets because there's no change in both. Your comments on that?
In July 24 itself, we had made comprehensive changes in the capital gains framework, and therefore there was no need to actually touch that segment because those rationalizations had already been done. So therefore, that has not been touched.
Thank you, gentlemen. Thank you for talking to ET Now, and thanks again for joining us this evening. So here we were talking to the tax experts, or the people who were behind the announcements of taxation and duties today. Back to your studio.
Well, that's my colleague Sumit Chaturvedi in conversation with Ravi Agarwal, the CBDT chairman, and Sanjay Kumar Agarwal, the CBIC chairman.